And good afternoon. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, August the 30th, 2023. Market still had a lot of energy to move to the upside today. I'm going to begin here with the NASDAQ. I'm going to start on the 30-minute chart and then probably move up to the hourly, but I'm going to keep this very focused on the move at hand. So large picture, really no changes there. Continue to view the action that we're going through is a minor second wave. Again, beginning here on the NASDAQ, we have marked minute waves A and B as complete. So that's A of minor 2, B of minor 2. We're in that C wave. It has consisted of some glorious upside moves, some very, very strong upside moves. And that primarily is as a result of the massive influx or inflow of additional capital back into tech stocks, back into artificial intelligence sector, back into areas where I guess there are asset managers and otherwise portfolio managers needed a stronger exposure to. Whatever the reason is, they did it. And yesterday and today were some primary reasons. Now, triggers remain with the employment situation and the employment data that we got on Tuesday, I think it was, which produced this huge rally yesterday. And that would be that there was, the number of jobs available dropped substantially. And that was the surprise. And I guess the market took that as like, hey, that must mean that we're not going to have that wage inflation problem. So therefore the Fed, blah, 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 go down the line with that narrative. More important as to what we witnessed going on was we were working through a C wave. The count got adjusted yesterday because here in the NASDAQ, as soon as it broke above 15,418, it gave us a signal that minor wave 2 was not complete. The overall pattern remained to show that we had off of the 14,608 low, which is from August the 18th, we had an ABC up. And good enough for me, I marked it as minor wave 2. That proved it's like, well, because the alternate would have been that it was only wave A and that this decline was wave B. As much as I'm not as pleased to mark this as a B wave, it does fit. We had a very large A, then a quick B and a C, all very, very quick last Friday. So in other words, the Thursday was the bulk, and it really did come in as 5. And I'm thinking, okay, that was 3, 4, and a 5. But on reflection, if it has to be a B wave, then it's an A, a B, and a C. And the A wave was totally extended. So it does not appear to be the best. But one thing that Elliott always told analysts, that told the person doing the analysis, it has to have the right look and feel. So there are certain times when it's like, it just doesn't have that look and feel. It just does not look right. And this kind of is one of them. But what Elliott ended up saying is that you're going to have to, you will whittle it down to what your possibilities are. And sometimes you're going to have to go with what doesn't look perfect. This is one of those cases. So again, the minute B, we're in the minute C going up. It's going to consist of 5 waves because all C waves are 5. Then we have 1, 2, truly a glorious third. In terms of Elliott, this is a third wave. The internal third within it, the explosion, just the power, just everything that went with it. And then thinking that could have been the 4 and we would have moved up in the 5, but that didn't fit. So again, what kind of threw it off was this. And this coming down and then going back up and putting in an additional new high. And that was today. So again, I'm left with that it did finish wave 3. So the internal third wave. So we remain in this possibility that we still need a little bit of a leg down, because even if I just do very simple retracements for what we would consider a small fourth wave, we'd be looking for it to come down into here. So you're looking at it's going to break down and get to probably as low as 15,400. So one thing that you do is you go from the bottom of wave 2 and you go to the top of wave 3. Yep, that's pretty good. And then your 3A2 is 15,313. But again, using Elliott, what Elliott told us that fourth waves will quite often, or most often, find their terminus or their endpoint within the price territory of the previous fourth wave of one lesser degree, and that's right here. So again, that's what to be looking for. But that range is 15,472 down to 15,362. So again, that's where I'd be looking. Is there a chance it's going to come down, go in there, and then still yet have one more race to the stars? Yes. Is there a possibility that 15,507, even though we exceeded it and closed above it, could that level, all of this in there, could this be the completion point? It can. I'm not counting on it. I'm giving the benefit of the doubt to the NASDAQ and to the markets, actually, that there is still additional upside to do. So where do we have additional resistance? So again, just to review, this area, possible for where that fourth wave could come. Normal would be 15,313, 314. Does not necessarily mean that that's what's going to happen, because again, using the third parameter would be fourth wave of one lesser degrees right here. So we had that 236 retracement right into this area as well. So it seems to be pretty steady. Now, what do we have left in terms of resistance on the upside? Well, first off, wave C would be equal to wave A, and equality is always a good level, at 15,560. And then above that level, we're really kind of moving up close, very close to, actually that kind of got taken away. So if I kind of just go, and I could put it there, or I can put it here, but I'm going to take the lower. I got to change this, sorry for that. I'm going to come into here, go up to there, and go over to here. Now here we're placing that where wave 5, so the internal minuette wave 5 of minute wave C comes in at 15,750. So we're up into that next zone, where minor wave 2 is 786 of the minor 1. So that's a cluster. I think we can get a few others right underneath it as well. Now, again, if I'm forced to, if this comes down below this level, which I'm actually looking here because it's inside this 4. So that's why I'm putting it here. So I'm giving the market the ability so it can come back down to 15,375-ish. And that's the level I'm putting these in. So we have 100%, which is where wave C would be equal to wave A, 15,560. 0.618 of would be a reading for the minuette wave 5. That's 15,606. Minuette wave 5 being 100% of minuette wave 1 comes in at 15,750. So we still have a blast from the past here to push this thing up an additional. You'll notice today there was a lot more selling in between all of this. This is a 30-minute chart. And break it down to the 15-minute chart. You can see that was after we hit that resistance at 15,507. I mean, it hit it on the nose. This was 25. The resistance was 50. And they just sold it off immediately. So to me, that was like the 3 is here. This is the 4. And we're going off, which is why I marked it as such. Now, I haven't put that 4 in, but I likely should, and I'll tell you why when I'm looking here at the 15-minute. It did come down. It fit within the fourth wave of one lesser degree. albeit that it was all up very quickly. I think if I take a look at the 5-minute chart, it doesn't even come. I'm trying to see if I can get an ABC out of it. It was just a straight shot down. So it becomes very difficult to even just to place it, like what really could it have been. But if indeed it was the 4, and I put the 4 here, then this is 1, 2, 1, 2, and we're getting ready. And we probably either at a 1, 2, and we're getting up into a 3rd, a 4, and a 5. This level becomes realistic, so does this level. And to finish this off, and again, the minor degrees. Now, tomorrow, Thursday, let's take a quick look as to what we got coming out tomorrow. We have initial jobless claims. We have the PCE index, and we have the Chicago Business Barometer. So 8:30 Eastern, initial jobless claims, personal income, personal spending, blah, blah. Then also at 8:30, we have the PCE index. That one is inflation. That one was going to be very specifically geared towards what's going on. And right now, it could be the core PCE increased slightly, but also at the same time, from last month to this month is coming in unchanged. So again, how the market wants to interpret that, I don't know. But what we're looking for is a buildup of what can happen when we get all this data, and decisions will be made. It's like, do we start selling? Do we keep buying? So again, I contribute to a lot of what we saw today on 0 TTE options, because the bulk of that buying we saw yesterday really kind of pushed a lot of things up. So to keep them up there, NVIDIA still very volatile. Apple still very volatile. Apple up another 350 today. So again, it's continuing to be supportive of additional upside, but what actually would be the catalyst to kind of drive it lower? I think there's plenty of things out there, and we saw this. That was right off that high, right off, and then they just sold it for 15 minutes, and that's how quick it was, and then just bought it all back. So what I would actually be looking for now, okay, back out to the hourly chart, is that once we are done, then I think we get this type of a kickoff, and it doesn't stop. So we just start dropping. That, you could say 15 minutes, it started to look pretty good, like they're just going to start kicking some butt here and we're all done. But it stopped, and they just immediately bought it back. And that was the clue, let me say. Because once I think we get that top in a minor 2, and we're going to begin a minor 3rd, under this count, it should just go and not stop. Moving averages still actually pointing higher. And actually the hourly, strongly, all in alignment to go up. So that's what I mean. It has to turn quick and break below the 4 and the 8, break below the 20, start breaking below the 50s. And that will chew itself up. When you get a move like that, where it comes down and just starts busting through 50 and the 200s, it's dangerous. And it just perpetuates additional selling. So for tomorrow, I'm thinking, depending on what these reactions are going to be, so we might get all this action overnight, setting us up for the beginning of the decline, as we saw here. This all took place during Globex. And it wasn't here to when we finally started to open. And being on last Thursday, there was initial jobless claims and other data that came out during this time. And it started, and it started, and it started, and it kept going. We could see it again tomorrow. Different sets of data. So we'll see. Over in the S&P, basically same story. Here again, we're in the minor wave 2. Here's minute A, minute B, and we're in the minute C wave. And within it, as in the same place, I feel that we have done a 1, 2, 3. This one is off. So I would probably put it up a little bit, which I'm going to make my adjustment. because I think we still need a 4. But if that's the 4, then I want to adjust this so that we get a little bit cleaner on beginning point, end point. Yeah, 4501. Let's just add 11 points to that and see what it does. Let's see. Let me get that straight out. It is 4501 on the nose. Okay, bing. So that brings it up. And so again, we need to leave the benefit of the doubt that we might still see an additional drop down. But again, I'm looking for basically the same area. So that's why I'm going to leave this here at 4501, but we have to leave open the possibility that it's going to come down and do it again before launching. Now, if we come in tomorrow and we're starting to, and we're up in this area or even up here, and then the number comes down and they start sliding to go down to this level, there's going to be a higher probability that this is all done, right? ABC minor 2, we're done. Excuse me. And then we're going to be moving into that situation like we saw last Thursday. Excuse me. Sorry about that. Now, resistance. First swing out of the gap, if we got a minuette wave 5 to complete the minuette wave C, we have equality. And equality comes in at 4582. Sitting right there. We continue to have some resistance, but it's kind of been exceeded, but it's been playing around it all day at 4525, 4526. Above that, we have 4551. Again, that's secondary to the equality. So what'll become more important is the structure. If we go 1, 2, 3, 4, 5, and it kind of closes in here and they start taking this thing down, then you're going to be able to be more comfortable putting a 5 there, even though it did not equal coming into equality. What we have above all of this is 4573, which again, also minor 2, but it's a retracement level, and then it would have reached the 78.6 level. Not as common, but possible. And then we have 4634, which is the high and the starting point for wave 1 down. So wave 2 cannot go up and go beyond it. Then it's not a wave 2. Then we'll be looking at something totally different. So again, 4573, then we have 4582 to 85. So this actually is 4573 to 4585. And then we come in just below at 4632, and that's at 34. So that would be a squeaker. If it only got up there and then turned and collapsed, that would be like, wow, did not break a rule, but boy, did it come close. So, and again, I really necessarily would not be looking for that because this was a 5-wave structure down to finish minor wave 1. And even though this is not necessarily a flat, it shouldn't go that high. Now, moving averages here as well are all on the hourly chart, pointing pretty strongly higher. So that again gives a little bit of catalyst to we need to complete the move. So again, 1, 2, 3, we got a 4, and now we're going to come up in that 5, and here's our zone. That's our first level, and then the zone, because it's a cluster, is more in tune to where the market is going to stop. All right, I'm going to complete it right there. We're going to try to keep these tight and get them out to you guys. And so have a great trading day tomorrow. Again, remember, we do have those numbers in the morning. We have initial jobless claims and the PCE index. Both can be quite market moving. And the next update will be on Thursday, August the 31st.